AI in Accounting Explained. Artificial intelligence is transforming every industry, and accounting is no exception. From automating routine tasks to detecting fraud, AI is changing the way accountants work. But what does AI in accounting really mean? And will it replace accountants? Let's find out. AI, or artificial intelligence, simply means machines that can think, learn, and make decisions like humans. In accounting, AI is applied to tasks like data entry, bank reconciliation, invoice processing, auditing, tax compliance, and even financial forecasting. Instead of spending hours on manual work, accountants can use AI-powered tools to save time and focus on decision-making. Applications of AI in accounting. Break this into 5 main applications. 1. Automation of routine work. Example: AI tools scan invoices and automatically record entries in the accounting system. Benefit: faster and fewer errors. 2. Fraud detection and risk management. AI algorithms detect unusual transactions, duplicate payments, or money laundering patterns. Benefit: safer, more reliable financial data. 3. Tax and compliance. AI simplifies GST, TDS, and other filings by auto-checking compliance rules. Example: some AI tools flag mismatched invoices in GSTR2B. 4. Forecasting and financial planning. AI analyzes past data to predict cash flow, expenses, and future profits. Benefit: businesses make smarter, data-driven decisions. 5. Auditing. Traditionally, auditors sample transactions. AI can scan 100% of transactions quickly. Benefit: more accuracy, less human bias. Benefits of AI in accounting. Saves time. Routine work done in minutes. Reduces errors. Fewer manual mistakes. Cost efficient. Lowers administrative costs. Better decision-making. Predictive insights for management. Scalability. AI can handle large volumes of data with ease. Will AI replace accountants? This is the big question. Will AI take away accounting jobs? The answer is no. AI replaces repetitive tasks, but it cannot replace human judgment, ethics, and strategic decision-making.